Hi, this is Ian Coleman from PIA-First. This is the video analysis for FX majors for the week 6th of August. We're also going to look at the dollar. We're going to break down the time frames and highlight what we're seeing going into this week. So dollar index monthly chart, impulsive move to the downside from the highs from 2016. We've then seen this, what we believe to be a corrective move higher. If we just zoom in a bit on the chart, we can see that last month we posted a doji style candle or little net change. Now that basically highlights indecision in the index. If we go to the weekly chart, we can see that we've hit a 261.8% Fibonacci extension level at 95.27. We did post a bearish outside week, but that actual high was taken out, and we're just seeing this period of consolidation really. I think the chart that highlights sort of a two-way play in the dollar index is this chart. We believe that we're in a bearish head and shoulders pattern, so this being the head, this being the left shoulder, this being the right shoulder. A lot of the time when we get an index or a currency pair or a commodity inside a Ishimoku cloud, there has a tendency to be mixed and volatile trading, and that's basically what we're seeing here. Now we've sort of tested the top of the cloud last week, but then we've rejected it. What we believe we're going to be looking for is this move up here, possibly to 96 the figure. So if we break down to this time frame, which is the daily chart, here again we can see that Elliott wave, 5-wave pattern up to the 261.8% extension, and then we're getting this long period of consolidation that I keep on talking about. Yesterday or Friday posted a doji style candle. There is scope for this to be a head and shoulders pattern, so this being the left shoulder, this being the head, this being the right shoulder, but we need to see a break of this neckline 94.29 to confirm that. Now I'm just going to drop this off so that we can see this a bit easier. So we've got the potential of a wedge formation, so a push higher this week, and we've got trendline resistance at 95.74, and that in turn is near this Fibonacci retracement level at 96 the figure. So the scope for mild buying, 95.74, 96 the figure we're looking to sell into. If we get selling earlier and we break 94.28, then this dollar move is already underway. So basically we are dollar bears, but we're either going to sell a rally or sell a break going into this week. So breaking that down into the major currency pairs, the big time frames are not really telling us a great deal at the moment, but we're in a bearish channel formation in euro dollar monthly chart, weekly chart. We completed, or we hit a 261.8% extension level, and then we moved to the upside. But again, reflecting or reverse reflecting that dollar bias back onto euro dollar, we're just seeing this prolonged period of consolidation. Now we've got Ishimoku cloud support coming in at 115.17, and that's quite important going into this week. It should be noted that the long-term bias for euro dollar is still to the downside, but we're expecting a correction higher before the next move lower to complete this wedge target. If we go to the daily chart, we broke out of this channel, or sorry, this triangle formation to the downside on Thursday. We then had a retest of the breakout level at 116.11 on Friday, and then we started to move lower. So we've got some support at 115.10. And then we've got this trendline support, which I've just put in here. Could possibly be seen as a wedge formation, located at 115.03. So although the immediate bias is to the downside in euro dollar, we're looking for 115.03, 115.10 to support selling this week. To the upside, 116.51 is the immediate resistance, or bespoke resistance, I should say. And then if we break there, 118.25 is a formidable barrier to the upside. Cable, monthly chart again, we're not going to look at all these monthly charts, they're not really telling us a lot. 2 months of indecision, then we're starting to move again to the downside. If we go to the weekly chart, then we can see an impulsive Elliott wave formation up towards 144 the figure. Then had a strong move to the downside. The previous area that's been quite pivotal has again been quite pivotal, but we've broken through. We've got trendline support coming in around about 129 the figure, and then if we break that, we've got a 61.8% retracement level at 128.42, and we believe that's going to be quite important. If we go to the daily chart, again this is a reverse count, 1 2 3 4 5. Doesn't look like this fifth wave is completed yet. We do have an ending wedge formation, so if we just put the measuring tool on, we can see that even if we take a measurement there, for the last 19 days we've had mixed and volatile trading, and that has formed an ending wedge pattern. Now we need to see a break. Let's get rid of this. We need to see a break of the trend of lower highs, which is around about 130, 137, for a move up towards 133.62. However, there is nothing in cable that's suggesting that this move lower has finished as yet. 128.73 is trendline support, and like I say, if we go back to this time frame, 128.42 is that 61.8% extension. So to the downside, important levels 128.73, 128.42. To the upside, we've got that trendline resistance. We've got bespoke resistance at 131.05, so that's going to be quite formidable round there. And then if we do break there, then 133.62. Dollar Swiss in a large bullish channel formation. Again, 3 months of little net change, spikes in both directions, making obviously intraday trading quite difficult. If we go to the weekly chart, again we can see that period of consolidation. If we move to the downside, then 94.70, 95.20 is quite an important support zone to target. Looking at the daily chart, and again we've got that Fibonacci extension level at 99.80. We've extended it twice. Could be seen as a wedge formation, so again selling into rallies around about 100.70, or if it breaks 98.75, then the move lower is already underway. If we go to this time frame, then we've got the possibility of a bearish head and shoulders formation, and actually our call at the moment is to sell dollar Swiss at 99.80. If we break the support, then the measured move target's down here around about 96.70. Now dollar yen, quite a difficult one to analyze, I believe, at the moment. If we push out to these larger time frames, there's a possibility of a larger ABCD formation targeting sort of 95 and 92.50. Let's just take that off. It's irrelevant. If we go to the intraday chart, and I think that's the most important chart really for this currency pair, we're in a channel formation. Looks corrective at the moment. The most important factor here is that we've got bespoke support at 111.01, and we've got trendline support at 110.97. So we're looking for that to be quite a formidable downside barrier at the beginning of the week. And then to the upside, 112.28 is the top side of that channel formation. If we go to the daily chart, and again we can see that this prolonged bullish channel has trendline support at 110.97. So if that breaks, let's just have a look at the other charts. If that breaks, then so we haven't really got anything in the way of support until 110.20, and then 108.26 to the downside. So at the moment we've got a bit of a mixed view. Intraday I'm sure we'll be selling into rallies at the beginning of the week, but we're going to be looking at that 110.97 support level. Dollar CAD, large wedge formation, broke out, looks like a false breakout. We've got reverse trendline support at 129.48. If we go to this time frame, this is the wedge formation that we've broken out, but we also had this inside wedge formation which has actually held. So a break of 128.85, and the measured move target is down here at 122.47. If we go to the daily chart, range trading probably at the beginning of the week, immediate biases to the downside. 130.50 is our bespoke resistance. We have held inside this channel formation. To the downside, we've got 129 the figure as bespoke support, and then 128.65 as the 161.8% extension. So what we'd like to happen is a move up and then a move down towards this support level. Aussie dollar, the monthly chart highlights a prolonged period of consolidation inside a wedge formation. The weekly chart highlights consolidation really at the 61.8% pullback level at 73.27. To the upside, we've got bespoke resistance at 76.28, and then this trend line resistance around about 77.25. The immediate bias, I'll have to say, to the upside. This looks like a reverse head and shoulders, so left shoulder, head, potential right shoulder. Normally like to see the head protruding lower than the left shoulder. Plus it looks like a ending wedge formation, but again, prolonged period of consolidation. We've got bespoke support at 73.35, and we really need to see a break of 75.04 for this currency pair to move to the upside. Euro sterling looks to be in a bullish channel formation. We've had two insider army candles, clear indication of indecision in this pair. Normally, if we have a corrective move to the upside, it will normally break the previous peak. Trendline resistance is at 9009 this week, which is also between the 50 and 61.8% extension level. Really, the bias is a bit mixed and limited. But if we go to this time frame, we talked about this wedge formation last week on the intraday calls. We hit it twice and moved to the downside. This now looks like a corrective channel, and the reason I'm highlighting it is because I've got some bespoke support at 88.42, and if we get choppy trading maybe Monday and Tuesday, and then the trendline support is going to be pretty close to it, and then we have the potential to move up towards sort of 90 the figure. So immediately I'd look to sell into intraday rallies, but wary of this 88.41 support. Over the medium term, I'd like to sell into that 99 resistance. Now euro yen, let's break down the time frames. Marubozu level held. We've now got bespoke resistance at 132.60 to the upside, which this, or should I say, price action in July missed. We didn't quite get the trigger. On the daily chart, we can see that we broke the channel formation to the upside. We stalled, reversed in between the 50 and 61.8% extension level. We've now got bespoke support at 128.46. So it'd be pretty unwise to sell euro yen at the beginning of the week. To the upside, 129.32, 129.90 is our bespoke resistance, like I say, at the beginning of the week. Just highlighting this time frame because this really gives a bigger picture. We're in a wedge formation, expanding wedge formation, and the expanding wedge formation has an eventual bias to break to the downside. And we've also got a bearish outside week last week, so we can see that the immediate rallies was sold into and we closed low. So the bias is still bearish, like I say, but we've got that trend line support, and would prefer to sell into intraday rallies than to actually sell at the open. Okay, I hope you find that informative. We'll keep you in contact with any changes we see on the medium term outlook for the FX majors. Okay, thanks very much.